Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. I'm Tom Keene, along with Paul Sweeney. Join us each day for insight from the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app. This is a joy, and people go to me, why do you celebrate people that get it wrong? And I had a blistering argument once with some people about this. You learn just as much from people who get it wrong as you do from people to get it right. But it's always a joy to have somebody in who absolutely nailed this. And he has an informative note this morning from the Bank of Montreal, BMO Capital Markets. With the victory lap of the last 18 months, Ian Lyngen with a 10-year yield below 4%. Did you figure we would go price up, yield down in this manner? Or did you just make the guess and we got there for a different reason?
I've been reasonably confident that something would break with the terminal rate as high as it was for as long as it was. We're going to end up with 421 days at 5.5% as the upper bound come the 18th of September. And that is going to be not a record, but a very significant degree of tightening.
I talked to Matt Lizzetti. I didn't get to this. I'm going to get to it right now with Ian Lyngen. Nice move there, Paul, to change the mic around. It's like Paul could work at the Olympics in Paris on that to get the mic in front of pole vaulting. Ian, I didn't get to this with Lizzetti, but the answer is formulas like the Taylor rule are wildly distant now from where the Fed is. How urgent is it that the Fed catch up to what John Taylor at Stanford says, or other people, frankly, say they should be?
I think that the Fed is cognizant of this, and that's why they opened the discussion. They laid the groundwork for rate cuts in December of last year. Recall Powell's pivot.
Yeah.
Now, that didn't play out, and we all remember what happened between January and March. But by opening that discussion, the Fed has allowed the market to do some of the heavy lifting for it. So that's one of the reasons that equities had been performing as well as they had. And real rates, while elevated, were not at concerning levels as we had seen in prior cycles.
So I'm an equity guy. I don't know what this rate market thing is all about. I go to you guys in Ira, Jersey. Is 50 basis points baked in for September, or is there still some debate about September?
I think it's still a very active debate about September. I'm in the 25 basis point camp, and the logic there is we have 3 more key data releases before the Fed decides. We have 2 CPI prints and a payrolls number. And frankly, Friday's number, while it was somewhat troubling, was certainly not catastrophic. We have an unemployment rate that's still below 4.5%. We have positive payrolls growth. And at the end of the day, the Fed wanted to instill a degree of balance into the labor market, and that's precisely what they got.
Monday morning, there was a little bit of panic in the market, it felt like. I hadn't felt that in a while. I hadn't seen that in a while. People were actually talking about an emergency rate cut. Is that something, or is that just overblown concern on a Monday morning?
Well, given the price action that played out on Monday morning, what was going on with the yen, what was going on with Japanese equities and global equities more broadly, one would have been remiss not to at least have an emergency cut as a potential. But now we've stabilized. And as we've stabilized, the bar has increased for the Fed to consider cutting rates before the 18th of September.
I came in this morning, and this is the glory days of 20 years ago. It's how I got my job. I used to construct fancy charts. Okay, I did log VIX. That's its own story. It's away from me in Lyngen. But I did log inflation-adjusted 10-year real yield, the real yield. So I had a higher real yield as far back as July, 2.00%, 2.02. We gloriously come in. Then we have Japan. We come in even further. Where's a normal real yield right now? I think even global Wall Street doesn't know what to do here at a 1.80. Is that elevated still?
I would say that that's still elevated, and the Fed would argue that's still restrictive. But the reality is we don't need to go back to zero in terms of
Where do
real
we
rates.
need to go to get an efficacy for the overall financial system?
I think that our estimate's somewhere in the 50 to 75 basis point range.
Under 1%?
Under 1%.
You got to be kidding me. That's un-American. No wonder they're Canadian shock. That's why. Are you kidding me?
No, I think that that's actually a reasonable level to assume for real rates over the next 10
So
years.
you're modeling out a 6% nominal GDP. If we get a pop down to 0.50 positive 10-year inflation-adjusted yield, you're goosing. You got to be goosing out to 6% nominal unless you get global disinflation, right?
And what's to assume that we won't find ourselves in a disinflationary environment globally?
Agreed.
And I think that that's
Fair.
what we're running up against. And that's what, to a large extent, the Fed is trying to avoid. And that's why they're being as proactive.
I mentioned this, Paul, 3 times this week. Last week, single sentence that mattered. Whaley BlackRock. She's modeling China at a 3% run rate.
Yep.
Nobody, even Ian Lyngen. Lisa Mateo's ready for that, but not Ian Lyngen.
Ian, when the Fed starts cutting rates, let's assume it's September, how do they proceed from there? Is it every 25 basis points every meeting, every other meeting? Do they keep it open maybe at 50 points at some point? How does that work usually?
Well, we're certainly in a atypical environment insofar as the Fed is not responding to a crisis, at least not yet.
Okay.
All they're doing is going from restrictive to less restrictive. So they're not easing in the traditional sense. And so that will afford them the opportunity to deliver quarterly rate cuts if they deem necessary. So 25 basis points a quarter is our base case scenario.
Okay.
Depending on what the next couple of weeks gives us in terms of data, we might actually pencil in another 25 for November.
How about the political aspect to it? I mean, it's an election year. How does the Fed
What, are
historically deal with that?
Are you talking Canada or U.S.?
I'm talking U.S.
Okay.
I think that the presidential election has made it a bit more difficult for the Fed to do either a 50 or an intermediate cut because there's the political aspect of it. But 25 has been well telegraphed and is baked into the market.
I got to make some news here. You've been a genius. I can't say enough, folks, how Lingen's led the charge. David Rosenberg, what is it about Canada?
I don't know.
Montreal,
It's in the water.
Rosenberg up in Toronto. It's the air, the water. Maybe it's the Labatt's. Molson, I'm sorry, Bank of Montreal. But Ian Lyngen, help me here. If I get a 0.50 10-year real yield, where does that put nominal 10-year in the Lyngen universe?
Well, we will be pushing back below 3%. Now, that's not going to be this year, but that is certainly on the horizon for, let's call it, the next 24 months.
You are modeling sub 3% 10-year, 2.95%.
Now, by the end of 2026, very doable.
All right, I'm going to refinance the mortgage there. Now we're talking.
Ian
What I like
Lyngen,
to
thank you so much at BMO Capital Markets. I can't say enough about it. Folks, it's the most valuable fixed income note. Good morning, Ira Jersey, on the street. Go to BMO Capital Markets to see what Lyngen's thinking. It's a 3-hour conversation with the most important FX person on the planet. Audrey Childe-Freeman joins us now with Bloomberg Intelligence London. I just got to digress here, Audrey. Time is precious. Your thoughts on the success of France delivering the best Olympics ever. What's it like?
It feels good. It's not finished yet, but so far, certainly the feedback has been amazing. And what we hear from Paris is the atmosphere is excellent. And so it's a big success after early uncertainties.
Under the headlines, and folks, I can't say enough how Audrey dives deeper. Audrey, I'm looking at the Japanese 10-year real yield. And basically the experiment they've done for the last 3, 4, 5 years has a long way to go. Do you agree that we're only partly through the yen clearing experiment?
I agree with that view. I agree with the view that the unwind of the carry trade is not completed yet. I am very cautious in trying to quantify how much we've seen and how much is left. But if you look at some of the indicators, such as the CFTC numbers, for instance, which gives you a little bit of a flavor as to where we are, it would appear that, the market is still underweight the yen. So yes, the answer is we're probably not done yet. And to go back to the early point you were making about the BOJ, I also feel that, yes, the BOJ had a big part to play in that move last week and in the past few weeks. But for me, it's been very much, Fed driven. Mm-hmm. And I also feel that the next leg, I don't know if you can call it second, but the next leg lower in dollar yen will also be mainly Fed driven.
Do you have a target on that? That's important. If we get through 150, where does Audrey Childe-Freeman feel weak yen can go?
So I think at the moment it's very difficult to give you a level right now. Just the direction is if you get the direction right, you're a hero. But I think the level what I will wait to see is where the new ranges establish themselves. We're still not sure that we're not going to see another big wave of moves in the next few sessions. We've gone to 142 intraday on Monday. We're back at 147 today, just on the BOJ rate mentioned this morning. Yesterday we were at 145. So what I need to see first is the new kind of range that we base ourselves from 145 to 150, and that's where I kind of expect it to be. And if so, what do we do? And what I do is I wait for the next trigger to move lower, and I kind of feel that next trigger may come from the US, but it won't be as extreme as what we've seen in the past few sessions and weeks.
Audrey, I think a lot of folks are trying to get a handle on, we get the yen going from 160 to 140. Now we're back at, kind of 147. What's moving the yen? Is it the Bank of Japan? Is it the market? I mean, is this normal? What's kind of moving this market so dramatically?
So it's certainly not normal. I just feel that it was very much a combination of factors together. So we talked about the weakness in the US employment report last Friday, and I should say softness. It wasn't dramatically weak. It was just softer than what we'd become used to for the US employment reports, as well as the BOJ coming up more hawkish than expected last week, and this was happening at a time when positioning was had become extreme earlier in the summer, certainly when we were trading at 162. And the final point I would add, the kind of icing on the cake last week was it's still difficult to assess what triggered what, but certainly the risk-off market sentiment that we had via other asset classes, equity market downside, that exacerbated the unwind on some of the crosses and EMFX and EM yen.
Right.
For instance, that's another reason.
Audrey, quickly, I got only 1 minute. How do you use real yield analysis right now? How do you use inflation-adjusted yields in your study?
Well, what we think is that the US and the Fed disinflationary story should allow the Fed to cut interest rates. And remember that the narrative on the Fed has moved so much in the course of the year. And that's, from talking rate hike a few months ago to no hike at all to maybe a precautionary rate cut, and now we're talking about a series of rate cuts for this year. We're talking about 100 bips rate cuts. So this is happening in the context of disinflation in the US, and that's probably enough to take your dollar narrative lower.
This has been helpful. Audrey Childe-Freeman, thank you so much. Publishing at Bloomberg Intelligence. Can't say enough about that, a value add on the Bloomberg terminal. We pride ourselves on a different set of guests. Brian Wieser from day one has been different. We're thrilled that he could join us this morning. Just lots going on there with Madison and Wall. Brian, how broken, Brian Wieser, is Disney?
I don't think it's broken. I think that they, like a lot of media companies, have been struggling to figure out what to do and how to organize themselves for the future. I think that they had strategic clarity in October, thereabouts of 2018 when they launched Disney Plus. I think they lost a lot of strategic clarity, certainly going into the return of Bob Iger and in the subsequent periods. They're still trying to figure a lot of things out. They really had the right strategy trying to focus on global, for lack of a better word, domination in streaming, going head to head with Netflix and Amazon on the streaming video offering.
That's the heart of the matter, Paul, isn't it?
Yeah, I think so.
I mean, the bottom line is they're going up against giants.
They're going up against giants, but they're a giant themselves. Brian, they did actually show some profitability in the streaming business here today. What do you and the rest of Wall Street think about the future of that business from a profitability perspective?
Well, I think most of Wall Street is really focused on profitability, to your point. Now, where I sit, which is Madison and Wall, we think that they really need to focusing on ongoing scale, which might mean profitability is a later thing. Because if you want to build up to compete better globally with Netflix and Amazon, I think profits is something you got to focus on later on. They've got parks to fund profits. I think if you want to build a streaming business, you have to continue to invest in content programming and distribution.
So, Brian, they've had actually a pretty good quarter from the box office. The studio, have they gotten their mojo back there with all the Disney studio product?
Yeah, it definitely seems like it. I haven't focused on the studio results right now. I mean, obviously everyone's aware of just how well I think Inside Out and Wolverine, Deadpool have done. But I think that one could say, yeah, it feels like maybe they never really lost it. It was just a couple of bad movies.
Yeah. Brian, the music business is having an existential crisis over what copyrights are worth. Is it the same with the catalogs of the studios? Is Pinocchio or Dumbo or, something new, Mandalorian, are those copyrights maybe just simply not worth the goodwill or badwill on the balance sheet?
Yeah, well, here's the thing. When it comes to streaming services, you come for the new original content and you stay for the library. Disney has this massive and amazing still library, and no one else will likely ever have anything like that, but not for a very long time. So they need both, right? As long as they continue to have more and better programming, and Hulu, I think, has been crushing it from that front. Disney Plus arguably needs a lot more. Then there's something for people to come for initially and then stick around for. So I think you do need both. And Disney they'll be better positioned if they invest, again, more in programming and content for originals to support what they already have in this great library.
Can we have a moment of silence for Brian Wieser? Quickly here, Paul. Ask him a question on this. Brian Wieser nailed NBC in the Olympics.
Yeah.
Nailed it 5 years ago.
Exactly. So, hey, Brian, just to go down that path, I mean, I'm having fun with the Olympics. What does it mean for Comcast and NBC Universal? Is this going to be a win for them?
Well, I mean, here's the thing. It's probably, they're better off having it than not, I guess is a better way to put it. It's a really expensive proposition, obviously, to run the Olympics. And I'm sure they'll say, they'll make a profit on the Olympics, and that's good for them. But you could also argue, well, couldn't they also invest in other programming and be just as well off profit-wise? Probably. So I don't think we want to overstate it as somehow uniquely positive as a way to, build a business. It's definitely a way to build a business, but I don't think we want to overstate it either.
Brian, on short notice, thank you so much for the huge announcement from Disney spiking up early. And by public acclaim, your daily look at the front pages of Lisa Mateo Hour. Lisa, way too long. What do you got?
You missed it, didn't you? I know. Okay. Have you been to the movies lately?
No.
This is the problem. See, that's the problem, okay? A lot of people not going to the movies, so theaters are offering different perks. They're trying different things. There have been some summer hits. Deadpool, Wolverine, I'll probably see it this weekend. Inside Out 2, Despicable Me 4, those were big things this summer. But ticket sales still lagging behind last year. I mean, the summer is the big part for theaters. It's 40% of their domestic ticket sales. Fewer wider releases. A lot of people watching from home too. They're going to streaming. They're more comfortable at home. So what theaters are doing, they're offering perks like special popcorn buckets is one thing. In-theater playgrounds. You'll like this one, cocktail bars.
Nice.
Inside the theaters, okay. Order ahead concessions. I know my family loves this. You do it online on your app, and then you get there. You don't have to wait in the line.
Really?
But the popcorn's just waiting for you. Right. So those are some of the things they're doing. A lot of them like the IMAX better. I know we prefer that.
Yep.
You know,
but you pay for that.
But you pay extra for
That's
it.
Right.
Yes. So they're kind of banking on that too. So a lot of changes going on in the
I
movie
have
theaters.
to admit, and Afterthought is glued to the computer watching movies. She watched Chicago the other night. I'm trying to get her to watch Lost in Translation. It's not the same. The home laptop, our kids are being cheated.
Yeah.
Is the way I'd look at it.
Yeah, they're used to even watching it on their phone.
Well, I remember. I mean, my parents would tell me they would go to the movies theaters 2 or 3 times a week.
Oh yeah,
because that was it.
25 cents.
That was it.
Yeah.
And then and they had all the movie shorts and all this. Yeah. So that experience is different from what we grew up with, which I still think was a good theater experience. Now to today, the kids, you say with technology.
My father aged. Lawrence of Arabia was $2.75. It's the day he got old. Next, what do you got?
Taylor Swift fans are celebrating Kamala Harris's running mate Tim Walz. Okay, there's some reasoning behind this. Is he a Swiftie? He is a Swiftie. Okay,
he doesn't look like a
They're
Swiftie.
calling him the Swiftie VP. Wow. A couple things he's done. Remember back in November 22, right after that Ticketmaster disaster with the Swift tickets. So he posted a picture of his cat on X and said that it was online all day and now it's not getting Taylor Swift tickets. Then he went further. He signed the so-called Taylor Swift bill that was in Minnesota into law. It kind of guarantees that protection for people buying tickets online. Okay. And then he proclaimed 2 Taylor Swift days in Minnesota of June because the tour came to Minneapolis. So he claimed those days. And a lot of Swift fans are jumping on. They're making friendship bracelets with his name on it. So it's attracting that younger generation.
He's not wearing his friendship bracelet, but I do know it is a thing.
It's
a big thing. Right.
Yeah.
So maybe he's getting the Swiftie vote. That's got to help on the margin.
Because you need that younger, they're looking for that
I
younger
feel
vote.
deprived because I don't have friendship. Maybe
don't?
it's because I have no friends.
That could be it.
That could be it.
I'll make you one.
Next.
Olympics fever, right? That's all we're talking about. Olympics.
I love the pole vault last night.
See? That just amazes me, that sport in itself. Did you know they have breakdancing too, by the way? That's another story.
Yeah.
But the problem is that it fades out after 3 years. You have this whole hype and then it fades out. So Netflix wants to change that. They're partnering with the International Olympic Committee. They're filming documentaries right now about running.
Oh, no, they're doing
gymnastics.
the auto racing thing?
It's the same people, the Box to Box Films, that did the auto racing thing.
Okay.
So they're there, that production company, and they're filming all those different sports. And what they're going to do is they're going to take that footage and they're going to put it into different seasons. They have the Netflix documentary Sprint, so they're doing another season of that, in the off season when the Olympics aren't running. Right. They're doing another season of Simone Biles Rising because that was a hit on Netflix. So they're figuring, let's film again now and then we'll, air it later. So that will, help keep the interest. But they want to attract younger fans too.
And correct me, it's in Los Angeles next?
Yes, correct.
Is that correct?
No, you're correct.
Yeah.
Yes.
That'll be big.
It's going to, it's dazzling. In fact, Mayor Hidalgo out today just screaming the politics of France has just been pushed aside by the joy of this. Full disclosure, a Greifeld sighting at the Rockstar seats. I don't know. She knows Celine.
I think
she's like best buds with Celine.
Yep.
A Greifeld sighting. She is in Paris. David Gurr is our intermediary here, and we believe we may have a scheduled Greifeld conversation.
No kidding.
Catherine Greifeld, surveillance, Paris reporter. We're looking for that Friday. We're working on it right now.
Without Gus the horse, right?
Without Gus the horse.
Yeah.
Speaking of Paris, this kind of brings me into the next one. We had open water swimmers have done it. They have dived into the Seine River. Paris organizers, they said it was safe. They had a 2-hour training session. They came out. Everything was fine. But, the women, they kick off that 10-kilometer race starting one day. So tomorrow, the men's is Friday.
If the water tests correctly.
So, correct. Correct, but they say the weather's going to be great for it, so they shouldn't have any problems with the water and the bacteria levels. But a lot of swimmers are telling the Associated Press, you know what, we're still kind of worried. We don't want to get sick.
Well, I believe a Belgian swimmer was sick, but again, they're not sure if it's the river
if it was the
or
water.
not.
Correct.
Well, I mean, I saw it's going to be pretty cool if they do it because I mean, the scenery around that thing going through the Capitol is pretty awesome.
I mean, I got the Vilebrequin swimsuit. I mean, I got the fancy, overpriced French swimsuit.
Nice.
And I got floaties that Air France gave me. You know, I got them. But would you, Paul?
No.
I just.
I mean,
I don't think so.
I mean, if they have to do it, you got to test out the current, right? Because there's a stronger current.
It's a real current.
Right.
I would guess as an amateur, it's not like the Thames. The London current is, you stand on London Bridge after the third martini, and the water's going underneath you. It's like, whoa.
Yep.
Anyways.
All right. Good stuff. So we'll see how it goes.
So they did it. So
I'll
we'll
watch.
see. There is a backup plan in place in case they do not test it right.
Plan?
The backup plan is that it's a stadium that was the site of the rowing and the canoeing events. So that's there, on the ready, just in case the levels don't work out very well.
Okay. Lisa Mateo, thank you so much. Our newspapers this morning. This is the Bloomberg Surveillance Podcast, bringing you the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.